Good evening, everyone. Welcome to Admiral Markets. Welcome to the webinar, Balancing Between Need and Greed. Walking on a tightrope. It's always a tough balance to find. We're going to talk about the trading psychology and what kind of things help with balancing these two. Before that, as always, though, the risk disclaimer explaining that trading foreign exchange is considered high risk, just like any global financial markets and products, and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. Thank you for your attention on that. So today's agenda, we're going to be taking a look at the need and greed. So trading psychology, what is it first of all? Why is it important? How does that factor into trading? And we're going to take a look at how to avoid these mistakes. Of course, trading psychology, a very important pillar within the whole module of becoming a profitable trader. Other things include trading strategies, risk management, and money management, and trading psychology is just one of those as well, right? So they all have their importance, and basically we need a coherent, sustainable plan for all these elements to maintain that balance. Within trading psychology, however, we're going to talk specifically about need and greed. We already talked about fear a while back. If you ever want to take a look at that, the webinar is available in the archive section. You can find that by going to the Admiral Market website, go to Education, go to Webinars, and then click on Video Archive, and you will find that. The fear was somewhere back here, way down, I believe. Let me take a quick look. I think I wrote it down somewhere later on. Oh, here it is, Fear in Trading. I saw it somewhere. Here, 14th of March. Good. Let me go back now. I'll just quickly start with my take on greed and need, and then Toronto is going to take it over and dive into his thoughts about that, and then we both will provide solutions. So first, we're going to discuss what the problems are, and we're going to both give our feedback on that, and then we both will provide what we think are the best solutions to that. So I was going to start first with the greed in Forex trading. You can see greed in all kinds of waves, and I think all of us will recognize a few of them, or maybe some more, some less. But I think at least one we all recognize, let me say it this way, at some point or another, probably multiple. We are either taking profit too soon. What that means is that we Forex traders get a bit nervous if we're in profit and don't want to give away the profit, anticipating retracement, and maybe not having the patience to live through the retracement and wait for the planned target, and thereby settling for less. And that's also a bit greedy in a way. Like, I want to keep that profit, but we have to, of course, remain true and stick true to our money management purposes, because without getting a decent R2R, we're basically fighting against the current of the water. We're never going to reach that equity curve that we want, because we're never going to compensate the losses enough to pull us into a positive, clear positive territory. And what you might see then is equity curve that goes up and down with waves. So it could be flat in its entirety. Other problem is taking profit too late. That too happens. We have a certain plan, but we don't execute the trading plan, and we actually think that we could be aiming for more. Not necessarily saying that this is a bad idea, but it depends on your trading plan. If your trading plan allows for your TP, for example, that you have a soft take profit and then you trail stop it after that, I'm not saying that that's necessarily wrong. All I'm saying is that making an emotional decision at the spur of the moment and not planning for it, and then still deciding for other solution, that would be wrong, because most of the time emotional decisions at the very last moment, let's say, are not leading to the best and optimal decisions and exits. So that's the take profit side. And I think take profit is definitely a tricky element. It's, I think, one of the most difficult things. I do like trail stops, for example, but it's certainly not an easy topic. A lot of traders also focus on the entries, not so much as the take profits, whereas take profits are maybe even more important. So now we'll talk about the entry of trades. Take profits, very important, of course, for the money management aspect of the business. So that is how trading psychology and money management interact, for example. How about entering a trade? Too soon, for example, or too late? Point 3 and 4 on this slide. Entering a trade too soon, for example, could be in anticipation of a move. We get a bit excited because of price moving in one direction and price action within, let's say, for example, a 1-hour candle. Price starts moving up impulsively. Our rules say we're actually waiting for the 1-hour candle to close, but still, because of the bullish-looking candle, we might enter. This is just an example of entering too soon. But however, at the end of the hour, the candle totally looks different, looks bearish, and there was no setup. That would be a classical example of entering a trade too soon in anticipation of something that actually didn't happen because the candle didn't close. And I recommend looking at a webinar of the 3rd of October that Untitled and I did regarding chasing the market, because that is a typical example of chasing the market. So if you want more info on that, take a look at that webinar. Entering a trade too late could be because of trying to catch a better price. So it could be like over position. But what I didn't mention here is, in fact, it could also be fear. Fear of entering, fear of executing the plan. That is definitely an aspect that could hinder a trader from executing. Second doubting, second guessing, these are all elements as well that belong to entering a trade too late. That's of course different. We're now focusing on greed, but that could also be a part of it, fear in this case. Let me now continue with greed in Forex trading. Some other examples that we could clearly see this aspect of trading psychology in our trading. Also, of course, with placing a stop loss. So the entire trade management, all the elements, the entering, the stop loss, and the take profit could be influenced, placing the stop loss as well. And one of those examples could be by placing it too close to price action. We have also a webinar on stop loss placement of the 20th of June. So if you want more info on that, I would recommend that one. And of course, yes, R2R is important. Yes, we all want to optimize R2R. Definitely very crucial, but you don't want to go to such an extent that we're placing the stop loss at an incorrect place within our trade management. If you're trading fibs and you're putting the fib, the stop loss somewhere at random halfway the playing field of the fib, that would not be correct, right? You want to put it underneath the stop loss unless you have tested some specific fib strategy and you're trading a very shallow fib. You might want to think about using the 618, for example, but you know what I mean. In general, you want to be at the correct spot. If you're trading, let's say, moving average breakout price over the moving average, you want to use, for example, maybe the moving averages as the correct stop loss. So you don't want to chip away from the correct stop loss because price could take you out. You would be technically, and then move your way. You would technically could have been correct, but with the incorrect stop loss, you took a loss. Well, in fact, you shouldn't have, etc. Let's see. Other things, of course, that we see are definitely overtrading and taking too many trades against one's trading plan. We want to be a sniper. Being a sniper does not necessarily mean that we're taking one trade a week. It depends on your trading plan. If the trading plan that you've built incorporates 5 trades a day, then you're still being a sniper if you take those 5 trades a day. You're not being a sniper if you take 20, though. You're not being a sniper if you have, according to your trading plan, one trade on average a week, but you take 10. So it's all expected trading plan average versus reality. That's what it's about. If those match, you're a disciplined sniper. If those don't match, then you're not. And it has nothing to do with quantity, in fact. It's definitely justifiable for some types of traders to take multiple trades a day. So, but in any case, if you take too much, it's overtrading and taking too many trades. So you want to focus on the trades within your trading plans. Risking too high trading capital, of course, a very dangerous aspect of this. And if it's too much, it could be fatal for the career of a Forex trader. So at all times, we must avoid being burnt out or being taken out of the game, in fact, because our trading capital is, of course, our ticket into this business. And we want to avoid attempting to risk more for that one home run. We want to hit home runs, but in a different way, with normal risk, but with a big R2R. Let's move on to, that was the greed side. Maybe some more info on need. And it could be a lot of things, right? Depending on all the characteristics, all the personalities, all the psychologies out there, there could be a big variety. And in this regard, it would really, to get, of course, a more precise analysis of everyone, it would have to be more of a one-to-one setup. This is too difficult to generalize for everyone. But in general, we could say that most of the traders could have one of these things. We see traders that want to have a trade, that want a win, are focused on winning, not much on the profit side. I've read things about, for example, that has to do with the fact that our society is focused on, the school system is making us focus on being correct. Our jobs, our jobs are making us focus on being correct and not taking risk. A 9-to-5 job or an 8-to-5 or even a 7-to-9 job, no matter what, is mostly focused on avoiding risk and being correct. Forex trading is really, I would almost say to a certain extent the opposite. We're here to take risk. We're risk takers. We're here to take a loss because we need to take, we need to be able to take a loss to be able to win at the end of the day and at the end of the week and the month. There's no other way. We're also sometimes in need of action. If we use it as a method of entertainment, not too good. In need of excitement, or unfortunately, if too much dependency is on the profit or income, it could be dangerous as well. That's why trading with risk capital and not core capital, let me say it this way, is better and recommended. So those are examples, I would say. All right, that last point is mistake, should have been deleted, but that I guess wraps it up. So you can see, these elements basically to have a super cool mindset when trading, because that's what we need. We need to be adverse, flexible, responsive, aware of the situation, totally focused. Then these aspects would not support that. Okay, so that's my side, and I'm going to pass it over to Tarantula.
Thank you very much, Chris. Nice introduction. And now we are going to talk a little about pyramid. I will explain what is my view of balancing need versus greed, but we also will talk about 4 horsemen of the apocalypse. So bear with us. So need is in simplest form something we need to live a good life. So needs can be objective and physical. Physical, such as food, or they can be subjective and psychological, such as the need for becoming a star or self-esteem. Scientist Abraham Maslow, he gave his hierarchy of needs, and we also learned that on many faculties, high schools also, and that pyramid is often portrayed in the shape of ascending pyramid, or I like to say ascending triangle. Sorry, the most fundamental and basic 4 layers of the pyramid contain what he said and called by deficiency need, or D needs: esteem, friendship, love, security, and physical needs. If these deficiency needs are not met with the expectation of the most fundamental psychological need, then there may not be a physical indication, but the individual will feel anxious and tense. So, on the first extent, we see psychological needs. Those needs are breathing, food, water, shelter, clothing, sleep. Those are basic, primal needs. And those needs are contained in every human being, even in animals, in all animals. Air, water, food, those are metabolic requirements for survival. And clothing and shelter, those are necessary protection from the elements. Also, we might say that there is sexual competition between animals and also humans, and it also shapes that instinct. Until the primer layer is completed, we cannot proceed to the next level, which is safety and security. So the first psychological needs, they need to be completed, satisfied, and then we can proceed to safety needs. When the physical needs are relatively satisfied or completely satisfied, then we take precedence of dominate behavior. So in the absence of physical safety, let's say due to, I don't know, natural disasters, war, family violence, child abuse, or some sort of traumas, or maybe what is also important for us, in the absence of economic safety, due to economical crisis, due to bad forex trading, due to lack of work opportunities, then that level is not completed. So safety and security needs include personal security, financial security, health and well-being, and safety net against accident or illness. So safety needs are what we need to master. Having in mind that we have mastered all psychological needs, that we are completely safe by the means of psychology, we have clothing, we have enough sleep, we have food, we have water, then we need to move on safety and security. That is important for our business in Forex market. Only if we complete the total satisfaction, relative satisfaction of the second layer, we can move on to love and belonging. I won't talk now about for the fifth layer because it's not important now for us to know. But the thing is, now distinguish greed and need. Need should be always distinguished from the greed and also from other potentially bad things for our Forex career. We only need to be satisfied as for the second and the third layer. Fourth and fifth layer will come in due time. So if we are successful traders, we will have, of course, we will approximately have completed the 3 layers of pyramid or triangle of motives. So fourth and fifth will come in time. So we shouldn't be greedy, we shouldn't be overconfident, we shouldn't be unrespectful to others. So we are always aiming to be the part of the world, because we don't live only with people who are surrounding us. We are living in a world, and there are many influences which we can be a part of. So the next thing what I would talk about is, so remember, we need only the first 3 layers. Next thing what I want to talk about is fear. Fear is a very, very strong emotion in Forex trading. And since the inception of Forex trading, I can say that fear and hope are maybe the strongest emotions of all, and they are present even in seasoned traders. So me and Chris were talking about these cycles of emotions. But let's state again that fear of losing is the top of the all fears. Fear that we will lose the money by trading, or if we do not trade, then we do not have the opportunity to make a profit, is equal to a spiral of doom. So the first, if you watch these cycles, we can see that there is an optimism, and then as the market grows, we need to think, okay, we will go with the flow. So we will come to euphoria. Euphoria, that means that we will think about ourselves that we are the bosses. Now, that is directly connected to the fourth layer of the pyramid. But because the third layer and the second layer have not been completed yet, we cannot jump to the fourth layer. Look at this slide. What did I tell you? Who's the man? Margin up for early retirement. That means that we are overconfident. That means that we are basically are not aware of the market. We have a fog. Fog has blinded our eyes. So we have jumped from the second layer of the pyramid to the fourth layer, and that is not good because we will receive a slap afterwards. The market will beat us. It starts descending and we see there goes complacency, and then after that it goes fear. Now there is support. You see how the price is falling down. Also our emotions are falling down. The support is fear. Support has been broken. Now I'm viewing that from the eyes of a Forex trader. And then we go in the spiral of doom. Anxiety, denial, panic, capitulation, anger, depression, and disbelief. These are all signs of our incompleteness. How can I say in English? Incompleteness of being a successful Forex trader. That is why we skipped the third, and we haven't yet completed the second layer of the pyramid. And we went to be very euphoric in the beginning. So that is not correct. You need to be a good psychological player. You need to complete the whole cycle to just understand what I'm talking about. And if you haven't completed this spiral of emotion, then you are very mistaken. Because I also told this from my personal experience. After the surrender, of course, there will be another cycle. We will again be ourselves, and then we will again start from the very support, which has been fear. Now it turned to a resistance, but we know that it can be broken, and we will go up again from optimism to euphoria. But first of all, we need to swim with belief, thrill, and everything in between third and fourth layer of the pyramid of motives. Okay? Until then, we will just go in infinite loop of the market cycles of emotions. When we complete the second and the third step, we can move on, but without any excessive euphoria. We always need to have in our minds what market can bring us, and that the market is the chief. So we are not the bosses, market is the boss, and we are just followers of our boss. Okay? So because if there is no market, if the market didn't exist, we wouldn't be Forex traders. That is very, very true. The next thing, and the next slide will show you the four horsemen of apocalypse. Now, you all know what four horsemen is, and okay, this needs to be four horsemen, not horsemen, it's horsemen in plural, but four horsemen in mythology, you know, I won't talk about it now. I will talk about four horsemen in Forex trading: hope, fear, greed, regret. We also need to talk a little about hope and regret. I need to say that hope is very dangerous for traders. Sometimes it can be very paradoxical because hope is usually thought of as a very good thing, and in most instances it's a good thing. But in Forex trading, as you know, we were talking about working hard. Sometimes working hard in Forex trading is not the same as working hard in factory. So that is the same for, that is really paradoxical, but that is the truth. The same is for hope. Hope for other things in life is a very assertful, very good thing to have hope for something. But in Forex business, hope is very, very dangerous. It is the expectation that something will happen, or that can be a strong desire for it to happen. When we trade with the hope, we usually hope that we are right, that we will make money. So hope can cause us traders to move our stop losses further away, or as I know, delete them completely or altogether, because we think that the market will turn around in our favor, allowing us to avoid a potentially losing trade. Hope works in tandem with greed when traders hope for unrealistically large profit and move profit targets further out. And how it ends, you know, it ends with a trader taking a very small profit because they never take the profit when it's at a decent amount, because they hope it will keep going and going. Hoping that every trade we take is very foolish. When we hope that we have every single trade as a winning trade, we are also expecting a favorable outcome. So that means that we are greedy, and that is not correct from the psychological side of the market. We will always have a mixture of winners and losers. But over time, if we manage our money properly and we do not overtrade, we will see the edge. We will see the edge. So it would make far more sense to hope for a profitable trading year if we follow our market plan, our strategy, our money management, risk management, than hoping for a trade to be successful. Regret is the feeling basically that traders feel after a losing trade or a missed trading opportunity, or maybe sometimes not making as much money as they would hope from a market. Regret causes traders to chase trades by jumping in the market after a setup has already triggered. We have talked about that, and that means that we are taking a far worse risk-reward potential on the trade, which makes it a lot harder to turn a profit on the trade. Chasing trades is not how a skilled and patient trader behaves. I know that some very profitable traders do that from time to time. As I said, those emotions are even present in very seasoned traders. Chasing setups can be very slippery slope to forgetting about our trading plan and kicking off the process of trading randomly or gambling in the market. So those things are very, very dangerous to us as Forex traders. So we always need to have those in mind. Those which differs successful Forex traders from unsuccessful is that they can deal with four horsemen, and particularly they can balance need and greed. It's very true, I need to say, that we are either a greedy trader or that means scared or scared trader. We cannot trade greedy and scared. So we are either more inclined to be scared, or we are either more inclined to be greedy. But the best thing is not to be to the full extent one of those things. The best thing is to find a balance between need and greed, right? Between need and greed. Next slide will show us that basically greed is a killer to our accounts. By definition, greed is a selfish and excessive desire for more of something as money than is needed. So we become very optimistic about our trades. So this is the important thing. When we enter a trade and it moves in our favor, it's easy to get carried away and hope or expect it to move further and further, creating bigger and bigger profit. That's the spiral of doom. That is the euphoria. That's the fourth cycle, fourth layer of the pyramid. But if we haven't found any balance between need and greed, we are skipping the layers. So again, we have uncompleted layers below us. And what that means, that will create a fog on our perception. So we will be blind to real market conditions. The consequence is that winning trades are turned to losing trades, Greed and fear are very strong, and they can have the biggest impact in our trading, even, as I said, on most experienced traders. Symptoms of greed include also holding on to a position for too long time. You already know that. We talked about it. Over leveraging, that is the killer for accounts. Enlarging position size, that means that I have talked about money management. You have that webinar recorded. We talk about it. I showed you how I do money management for scalping, intraday trading. And if you over leverage your trades, that means that you are really impatient. What did I say about Forex market? Forex market is fast-paced marathon, and you are the long-distance runners. Okay? But that doesn't mean that you need to chase the markets. We also talked, me and Chris, about it, chasing the markets. Why chasing the markets usually go wrong. And of course, revenge trading. That revenge trading is again a sign that we cannot accept. We regret. Four horsemen of apocalypse. Chasing trades is dangerous. Regret is dangerous. Instead of being regretful over missing a trade setup, we, the professional traders, will simply remain calm and observe the market, learn a little something, and keep our hands in our pockets until the next trade comes along. Trying to compensate for a mistake can be really dangerous. Okay? And also, it is far more important to be focused on the present of the market rather than the past, because the market is constantly evolving and it does not care how much you made or lose or make in a trade. The market really doesn't care. Taking trades without any fundamental or technical validity, that also is a very dangerous thing. And that happens when you're greedy and when you're regretful, and also when you're very hopeful. Because you will jump in a position based on a feeling, without any technical means, without any fundamental validity. You are just hoping that the price, over-leveraged entry, will make your trades profitable. And then that means that sometimes you will have luck, but most of the time you won't be so lucky because you haven't completed the second layer of the pyramid. You are very fearful, but in the same time you are very greedy. You're fearful of the market because you won't keep your profits for too long, for a normal period of time. Let's say to the next resistance or to the support, you will close your profits earlier, and you would let your losers run. So you are greedy, you are hopeful, and you are regretful, and you're entering the spiral of doom. So you need to find a balance between need and greed. Okay? The balance is always the best thing. The balance is in the nature, in the world itself. Our planet is in balance. We have North Pole, we have South Pole. It means that the world is in equation. If we don't have that equation, the equity that in our heads, we will become blind to the market conditions. And now we will show you how to balance in between need and greed.
Yes, indeed. Oh, sorry.
Yes.
I thought it was my slide.
I know, Chris, you will continue, and this is what I wanted to say. Novice traders try to be greedy when it comes to profits and scared when it comes to losses. That is paradoxal situation, but that is the very truth, because the paradox is indeed the truth. Novice traders are always greedy and always scared. That is not the same thing. That is totally different thing. But those things, how can I say, make a confluence. Greedy and scary is the most dangerous thing in the Forex market. Psychologically dangerous, not technically. I'm now talking about psychology. Then you need to avoid the four horsemen syndrome. Hope, fear, greed, and regret. You should fight against it. Then have a plan. Don't risk more than 3% or 1% if you are novice traders. Try to satisfy 3 levels of the pyramid. Those are 3 levels. Such psychological needs, probably because you are trading on your trade on Forex market, that means that the first layer has been satisfied. The second level, safety and security, health, employment, property, family, social stability, your account, okay, needs to be stable. Your income needs to be stable. And then you move on to love and belonging, because you are financially independent, you know how to make money, you are good in your job, you are very healthy, and people will start to recognize you. That will apply to friendship, family, intimacy, sense of connection. And those are 3 things that you need to have if you work on Forex market to move on later to 4th and the 5th layer of the pyramid. Don't jump in from the 2nd to the 4th layer. And 4th layer is overconfidence, excessive self-esteem. So I know many traders do that after they have winning streaks of 10 trades or 20 trades in a row. They are becoming gods in Forex market. There is no God in Forex market. There is only you, and there is only market. 4th and 5th will come in due time. The quote, my favorite quote, I don't know, maybe I think that I can make it up, but Forex is fast-paced marathon. I did say on purpose, fast-paced marathon. And you are the long-distance runner. Forex trading psychology is the line balancing need versus greed. Listen to our webinars, watch live trading, watch the analysis, comment our analysis, read psychological books about Forex trading. It will come to your head. You need to understand the market. And very important things. I talked about that yesterday, right? When we had a webinar. Reduce your lot size. Set a stop loss. And I will repeat it again. Reduce your lot size and set a stop loss. Trading without stop loss can be very, very dangerous. Okay? You need to know what stop loss is, and you need to know where to place it. Also,
Be realistic and make pips, not money. It is not how much money you make. It is how many pips you make. So, don't be greedy and chase after the big money every week. Concentrate on making pips. When you make 10 pips with $1, that means that you can make 10 pips but with $10. But only when your account is good enough and when you have completed psychological steps. And learn to trade. If you don't know, learn to trade, how to trade, invest in yourself. Making money is a byproduct of trading successfully, but the majority of traders will try to make money first and then learn to trade after they have lost a lot of money. That doesn't make any sense, but that is what always happens. The majority of traders that will ask for mentorship, training, usually have already lost a lot of money in markets. So first invest in yourself and then go trade, okay? That is called step by step. First, as we talked about, try to satisfy the second step prior to making the step to a third layer. And that is what I wanted to say about balancing need and greed.
Great stuff, T. Yeah, we're going to talk about some solutions from my side, and as a extra here to what Taratala was already saying. So from my perspective, 110% maintenance of discipline. It's very, very easy to slip once in a while, so don't beat yourself up, but it is good to try to maintain that discipline as much as possible, of course, and to follow our plan, because that's the second point. We have to plan the trade beforehand. No sense in jumping in. Very important. We have webinars on that from dating back from the 14th of November and 11th of July, in fact, 2 of them. So take a look at those for more information on that. So when defining success, basically, it's absolutely critical to look at the execution of the plan and defining that as success, not necessarily the profit. And eventually the trading plan should lead to those pips, as Tarantra was saying, and the pips then should lead to the profit. That is the flow that we should be focused on. So that's the third point as well. In fact, focusing on the execution or executing the trading plan correctly and measuring performance as a correct implementation. If you want, you could even consider putting some plan or some check card or scorecard in place that measures your performance in executing the trading plan, so that you can keep an eye on it and try to achieve or set a certain goal of correct execution. All right, so that would be a goal that one could think of. Now, what I do when planning those trades, so that all the first 3 points are basically focused on planning the trade. But then within the trading plan, what I like to do is use a take profit. A TP, in my opinion, takes away certain emotional decisions, and using a take profit takes that, let's say, the enticement away. It's planned, it's there, the market makes the decision. We've planned it, the TP is there, and we don't mess around with that. The market hits it, it's automatically closed. We don't have any decision anymore with regard to that. So that's an advantage of the TP. Now, of course, we have to have the discipline not to change the TP or take it away. So that's why the first point is very important. But a TP, I think, lets the market decide. When we move our stop loss, the market decided to retrace. It wasn't us who decided based on fear that we clicked out the trade in the middle of a move. Whereas if you see, for example, an upside move making higher highs and higher lows, and we move the stop loss below a fractal or support, and the market goes through that, then the market is deciding that it's breaking through the support. And we leave basically the market to make that decision. That's the best. We reduce those emotions. Other than that, for example, if you have a certain TP in mind, I wouldn't go for the last, very last pip. If you have a target at 135 on the euro dollar, I wouldn't put a TP at 135. First of all, the spread. Second of all, price and the market isn't that precise. It could go to 134.98, and you would be, I think, correct, but you wouldn't have the profit. It's not worth those 2 pips. And depending on the time frame and how much R2R is given away, I would go an X amount of pips below that. If we're looking at a 4-hour chart, I would maybe go to 134.80. If you're looking at a 15-minute chart, maybe 134.94. So that depends on the time frame. And what I've heard traders say, what is a pip or 2 among friends, right? So we don't have to be that greedy that we go for every single pip. But we do have to, of course, still keep an eye on our R2R, which is vital. Besides a TP, one could use a trail stop loss. This is maybe not suitable for scalpers because they are so precisely geared towards a certain number of pips, or maybe in certain cases not even good for intraday traders who want to close the positions within the trading session or the trading day, because that might give away too much of the expected profit. But if you are using a swing trade, you could think about that, because you could let the trade go for a day or 2. And in that case, using a trail stop loss lets winners run, but cuts losses short. And that is always, of course, one very good thing in trading. Many people talk about it. Many Forex traders talk about this phenomenon, but it's difficult to implement. Trail stop loss, using a trail stop loss is definitely one way of doing that. All right, so you cut your winner's loss short, for example, to a half a loss by trail stopping a fractal, for example. But once in a while, you do get one of those big winners. Risk with risk capital, we talked about that already. And when trading, focus on the process, not the outcome. Focus on the execution, not the profit, not how much one has already made or might have made. Those are all leading to regrets. I could have done that, regret. I wish I would have done that, hope or fear. These thoughts are really the center of the creation of all these emotions. So if you can control your thoughts, you would be able to be more successful in that. I don't do yoga myself, but I can imagine that might help. If you think that you need to work on internal thoughts, that could help, but I'm not an expert on that. Or I've heard even traders who write down, for example, the first thing in the morning they write down a full page of all their thoughts just to get that out, because all these emotions basically they're coming from our internal thoughts, our self-talk, our inner voice. So we want to focus on the trade plan and execution and try to avoid those emotions. One second, I cannot. I should have a second slide. I think it's the next one. Euro dollar, this is what I wanted to focus on, was a trail stop loss. That's why I had this chart here. Basically, to show you, sorry, the PowerPoint is responding a bit late. What I wanted to show you was how useful a trading stop could be if you're using a swing trade strategy. For example, this 1 hour chart. And by, for example, using moving averages. If you would trail stop the moving averages, let's say 15 pips above this band, you would get stopped out around the middle. Unfortunately, I don't have my drawing tool open at the moment, but you can see how effective it could be. For example, we're using the fractals. I already talked about this, but one could think about setting up an evaluation scorecard before trading, right? Oh, this is actually a bit different. Sorry, I was talking about evaluation scorecard after trading. Like I've correctly implemented this and this and this, but not this. Actually, this first point is before trading to check if everything is optimal regarding our mental and physical state. Yes, also physical, because the physical will influence the mental preparedness in a way. If we are tired, sleepy, not rested properly, whatever reason we're not fully focused, then we will not get the optimal result. So this is, in a way, we'd have to be prepared like a professional, to a certain degree, like a professional sportsman that is really fully focused. Right? We don't want to approach it with half-heartedness, because there are details, small things, opportunities that if you're not ready to absorb the information and process it with the utmost clarity, we're going to miss details. And believe it or not, these details are most of the time the reasons or the difference between maybe a big loss and small loss, or small loss and break even, or break even and a small profit, or a small profit and big profit, depending on your development as a trader. Once you taste the feeling of a profitable track record for a certain period of time, you will notice, or you have noticed, that you get more discipline, because you know that it's a game where details and good execution will drive the difference, and you get less thirst for proving a certain performance to yourself or maybe to others. You get more patience and discipline, and that will make you more relaxed, and you'll be able also to focus more on these details. And these details really make a difference. Proper risk and money management. We got enough said on that. Look at the webinar 5th of September and the 11th of April if you want. Set smart goals, specific, measurable, achievable, realistic, and timely. Creating trading strategies that focus on with the trend. That will make these emotions easier to deal with as well. Because let's face it, living through a huge retracement does make things a bit more difficult. Webinar was from 8th of August, focuses on trading strategies. Building a proper trading psychology, we talked about fear. That was the 14th of March, if you want to take a look. And basically, what it all boils down to is patience, discipline, and experience, and a mixture of these three. We want to profit from our strengths and limit the impact from our weaknesses. We all have them, but we want to maximize and minimize. Trade without those emotions: greed, fear, anticipation, impulse, bias, overexcitement. And trade with the eyes see, not what they feel. Tonantala also talked about that. So guys and girls, by all means, let us know what your questions are. I will just show you some charts in the meantime. But that was the main presentation of balancing need versus greed. And I'm just showing you some slides. There's really a topic that we don't need many slides, in fact. But I still wanted to throw some in there. How you can see regarding, for example, a with the trend strategy, how easier, for example, it is to wait for those breakouts. That could help with balancing that need and greed. And this is a perfect example of actually the screenshot that Toronto was showing, where he was showing the upside, right, and then the drastic downside with euphoria and the optimism. Let's go to that slide. Remember this price action. This is the euro dollar end of October, some 5 weeks ago. Let's go to Toronto's slide. It looks quite identical, doesn't it? A mountain, a peak. So On the right, of course, the up and down. Go back to our slide here. Pretty nice comparison, in fact. So once again, if you have any questions, let us know. Otherwise, we have webinars next week, the Learning Lab with Tarantula and the Trading Lab with myself at the usual times and places. Tomorrow we have an NFP event, indeed, Lau is saying. Yeah, that's true, Lau. It is definitely a good way to know oneself. It's like a mirror. We will find out the hard way what that is, what we see in the mirror in a way, what the market is telling us. We also have to be open to what kind of information the market indeed says to us then.
Yeah, and I would also like to say tomorrow will be NFP, so we need to be very careful. You saw what happened today with currency pairs. Dollar, Japanese yen went down and euro dollar went up after it dropped for 80 pips. So that is Forex market, and you need to know what you should do. Don't take any trades blindly. Yeah, Chris, everything you said, I agree with you.
Me too.
So guys,
that's good.
Yeah, thank you very much. Follow us on Admiral Markets, Twitter, Facebook. Read our analysis. Be with me and Chris with the session recaps and live trading. And we wish you many green pips. Thank you very much, and cheers.
Thanks everyone for being here, and have a great weekend. Talk to you soon.